Hello everyone, welcome back to another video. I am in Da Nang, Vietnam currently, and I just want to give you guys a quick update on what I have been doing in my portfolio. It's been a long time and I have made some moves, so in today's video I want to update you guys with basically everything that I have been doing. So the first thing that I want to do is show you guys how my portfolio is performing versus the S&P 500. This is also the portfolio that I started here on my channel to try and outperform the S&P 500 to see if I could actually beat the index. So let's go and take a look at my percent change versus the SPY. Let this load really quickly, and we can see that my portfolio, let me just zoom in here really quick. My portfolio is now up about 20%, 19.6% versus the SPY's 9%. So I am still outperforming the S&P 500 by more than double as well. And we can see that a lot of my outperformance actually started right here around the beginning of the year. So basically, since the beginning of 2023, my portfolio has been massively outperforming, and a large portion of that is because of the stock that I sold and because I went so heavy into Brookfield Asset Management, which we are going to talk about in a future video here, probably in the next couple of videos. But anyways, the stock that I had to sell was Magnet Forensics. This was a smaller cap company, and the reason that I had to sell this stock is because it ended up getting acquired. It's not been acquired yet, but another company came in and said that they basically wanted to buy the stock for about $44.50 a share. We can see that the stock is now selling for $44.56. So basically, I sold out of my position when this news was announced because the stock was trading for about $44, and I was like, okay, if another company is going to be acquiring the stock for $44.50, this acquisition could take months to go through, and I might make 1% by waiting for the acquisition to go through. So basically, I got 100% of my gains almost factored in entirely. So I took the gain, I sold the stock, and I then deployed that money into other stocks, which I am going to show you which stocks I put that money into. So in this video, what I want to do is run you through why I bought Magnet Forensic in the first place, what I saw, and run you through my initial due diligence and research notes that I took to kind of show you how this became such a massive success for me. And by the way, I made about 170% on this stock in a matter of about 9 months. So I more than doubled my money. And it was a massive success for my portfolio. And I'm going to run through all of that with you. So first off, what I want to show you all is this company IPO'd in 2021. And then it ran about 180% to a peak here in about, August of 2021. So in about 4 months, the stock ran 180%. Then from the stock's all-time high down to where I was buying it, it dropped by about 76%. So it lost about 3/4 of its value. So what happened in 2021 is a lot of new companies hit the stock market and then they ran massively. We ran kind of like a little bit of an IPO bubble. Then these IPOs started selling off, and I think that a lot of these companies got bucketed together, and basically all IPOs were selling off together. This again caused Magnet Forensics to drop 76% from its all-time highs, but during this time, the underlying fundamentals of the business were only growing. So basically what I saw was this company stock going down 76%, but every fundamental metric was going up. And it got to the point where I think this stock got super cheap. And I'm not going to lie to you guys, I think that I got lucky on this one a little bit. Because if we take a look here, I was buying this stock around $16 a share Canadian, and that's basically where the low was. The low for the stock was about $15.41, and right in this massive dip right here is where I was buying it again. So I think that Magnet Forensics got bucketed with all the other IPOs, but this company's fundamentals were actually sound, and again, I think that caused it to get quite cheap. And then I loaded up down here, and then we can see that the stock ran about 190% to where it is today from that pit here in June of 2022. So let's head over to my Magnet Forensics doc. And this was the initial research I did in Q1. That was the company's most recent report, was Q1 2022. So that's the report that I was analyzing in my initial research, and this is the research doc right here. And this says, so Magnet Forensics, the company overview. Company provides software that allows investigators to easily consolidate information between devices to find links and data across devices. So the company, basically Magnet Forensics, their main market was like police stations and digital forensics. So basically, whenever a police station has a case and there's a bunch of different devices that they need information from, like let's say a laptop, a tablet, a phone, maybe a desktop over there, what Magnet Forensics can do is consolidate all of that information into one place and then analyze it and find connections in the data, which can speed up the research process for digital investigation. With these cybercrime instances. So they were a very valuable resource to many different police stations and investigation offices. I don't know the actual term for it, but investigators were using this platform, Magnet Forensics, and they loved it. And they were expanding, and it was just a really great small business. Now, Magnet Forensics makes the process of finding digital evidence much more efficient and effective. It was saving police forces dozens of hours. It was basically, it was incredible. Companies also expanding into the private sector to help financial institutions and businesses of all sorts find evidence of foul play. So basically, if like an employee leaks data or something like that, then Magnet Forensics could be used to find the leak and patch it quickly. The company IPO'd last year, saw a ton of hype around the stock. Share price topped out at $64, currently trading at 16, which is a decline of 75% from the peak. Underlying fundamentals of the business have only improved though. As I said, the stock price was going down, but the fundamentals were going up, which is what I love to see as an investor. That's where a lot of the opportunity that I find is. It was a small cap company, so not many analysts or people were looking at the business. It was just like a small cap, they don't get a lot of attention, so I think that's why it got undervalued as well. Message boards seem to be very bearish. People saying the stock is a dog, down on their positions, and they're not happy. So think about this. When a stock is down 75% in the matter of a year, the message boards and the sentiment around the stock, it gets very negative because people are looking at the stock price and saying, well, hey, I bought this stock 6 months ago and now it's down 75 to 50%. And, it's just a trash stock. They're not really focused on the fundamentals at that point, and that causes a lot of people to just sell because the stock is going down. And again, they're focused on making decisions on the share price, not the fundamentals. Whereas I make decisions off the fundamentals, and that's why I had the conviction to buy the stock in the first place, even though it was falling. I think the market forgot about this company and is ignoring the underlying fundamental performance and growth. People seem to be focusing on the share price decline and making decisions instead of looking to the business, as I just said. I think it's cheap, very cheap. And again, I wrote this document in Q2 of 2022. So this was my research. This was my initial thesis on the business. As the world continues becoming more digital, the need for digital forensics will continue increasing. I believe there are long-term tailwinds behind magnet forensics, and the company should be able to grow and execute on these tailwinds. Both public and private sectors will be needing increased efficiency when analyzing foul play across many different devices. Companies should be able to continue upselling existing clients as they improve existing software and releasing new products. Sorry, there's a little bit of a typo there. Companies should be able to increase prices with inflation as well. That was my thesis on there. Market highlights. So this was the overall market for the business. Digital investigations market is projected to grow massively. The world is projected to increase its total data sphere by 3x over the next 4 years. More data to sift through means more increased need for this efficiency. And global cybercrime damages have 3.5x in the 4 years from 2015 to 2019. So there's a massive and growing market for magnet forensics. Now, the company also has some highlights here. I'm just going to talk about the ones that I like and I think are most important. So they had $70 million in revenue for 2021, 134% dollar retention. This is an important figure right here. So what this means is that Magnet Forensics would land a brand new client, and then they would be able to expand the revenue that they generate from that one client. Basically, what this means is that they would offer more services to this client, or the client would go and continue buying more services from Magnet Forensics on a yearly basis. So once they land a client, not only does the client stick with them, but the client then starts using more of their software and generating more revenue for the business. 81% of the company's revenue was recurring as well. That's very attractive to me. They had a 38% compounded annual growth rate to their revenue from 2018 to 2021, And then they are projected to grow their revenue again by about 40% in 2022. So revenue was actually projected to accelerate in 2022. Annual recurring revenue, compounded annual growth rate of 49% from 2018 to 2021. And then take a look at this, a 93% gross margin. That is how profitable this business is. It costs them nothing to run their software. That is a very high gross margin, and there's not a lot of software businesses out there that I can find that have this high of a gross margin. Now, also, this company was founder-led, so the founder is still the CEO of the business, which I love to see. Founder also owns 28% of the company, and insiders own 75% of the company. So there is massive insider ownership. The founder is heavily invested in the stock, and the founder is leading the company still. I love that, especially in a small cap company. Now, if we move on to the Q1 highlights that I was taking a look at, net dollar retention we already talked about, the gross margin that we already talked about. They were projecting revenue growth in Q1 of 33%, and then as the year progressed, they continued seeing their revenue accelerate. So in the third quarter, they announced that they are expecting 38% growth for the year. So again, they increased their revenue projections for the year because their business was just seeing so much demand. Now, let's take a look at the balance sheet here. When I bought the stock, they had total assets. Well, first off, they have total cash of 117 million, accounts receivable of 13.6 million, and current assets of 135 million. Total assets of 156 and goodwill of only 8 million. So low goodwill, a lot of cash, and 156 million of total assets. Now, if we take a look at the liabilities, current liabilities of 47 million, total liabilities were 65.7 million. Now, what does this mean? Well, take a look at the cash once again. 117 million of total liabilities, 66 million, let's just call it. This means that Magnet Forensics had more cash than total liabilities. In other words, they had a very, very strong balance sheet. They could wipe out all of their liabilities if they wanted to and still have like $60 million left of cash. So a very strong balance sheet. I loved that, and that gave me a lot of confidence in this business not going under or any risk like that. Now, also, when I looked at the liabilities, they had total deferred revenue of about $50 million. Deferred revenue is essentially a company paying you for your services and then you needing to deliver on those services. That was the vast majority of the company's liabilities, was just services that they had to deliver on. That's not really that much of a risk in my opinion, because all they got to do is deliver those services. And that was, again, a large portion of their liabilities. I loved to see this. So let's move on to their cash flow now. They had 2.5 million in stock-based compensation for all of 2021. Now, this is interesting because one thing that I've noticed with my own investments is when the insiders own a large portion of the business's shares, there tends to be a low amount of stock-based compensation. Why is that? Well, it's because stock-based compensation dilutes the shareholders. And when the insiders are the largest shareholders, what that means is stock-based compensation dilutes them. So whenever there is a high insider ownership for the stock, and whenever the founder owns like 30% of the shares, it means that they don't really want to dilute themselves, because if they dilute the stock, they are diluting themselves massively, which also, again, is why I think there was a low amount of stock-based compensation going on, because the insiders and the founder did not want to dilute themselves with stock-based compensation. Now, also, we can see that operating cash flow for Q1 is weak, by the way, for this business, but operating cash flow for Q1 was 1.6 million, up from negative 4 million last year. Now, this is insane. CapEx is only $356,000, okay? That's not even $1 million to operate the capital requirements for this business. It is an incredibly efficient business to run. Free cash flow for the quarter was about 1.2 million then, and in the trailing 12 months, they had free cash flow of $22 million. So on top of this business having an incredibly strong balance sheet, as we saw earlier with more cash than liabilities, they're also generating $22 million of free cash flow on an annual basis. So again, I don't think that they're at any risk of going under. And then when you take into account that they were projecting 33% revenue growth, it looked like a really strong business. Revenue compounding at 30% plus. They're generating free cash flow, massive insider ownership, founder-led, and very strong balance sheet with more cash than liabilities. No dilution was happening either. They didn't need to dilute because they're generating free cash flow. And the interest payments on their debt was $300,000 for the year because they have basically no debt. So their cash flow is going straight into the business. They don't have a lot of interest payments, so they're not really at risk of raising interest rates or anything like that. Incredible business, honestly. So then it comes down to what's the valuation? What was I paying for this business? Well, at the time, the market cap was $534 million. However, since they had so much cash, I wanted to use the enterprise value. And when we do the enterprise value, it was about $421 million. On free cash flow of $22 million in the trailing 12 months, this means that the business was selling for 19 enterprise value to free cash flow. That's how much the business was, basically under 20 times free cash flow for a business that is growing revenue at 33% plus annually and generating tons of free cash flow. So I thought that this was very cheap. I thought that it was very cheap for the business, especially if it could continue growing its revenue. Why did I think it was so cheap? Well, in general, I just thought that was cheap for the amount of growth that the business was seeing, and other cybersecurity stocks trade for 40 times free cash flow, if not more. Basically, what this means is that Magnet Forensics was trading at a significant discount to its overall sector and to a significant discount to its growth and to what bonds are offering. At a 19 times free cash flow, this company could basically deliver 5% plus to its shareholders, which is more than what bonds offer, which means that this stock was actually selling for a margin of safety at this time. So, very cheap in my opinion. Insiders, as we already learned, management is heavily invested. I think that insiders have massive incentive to continue growing the business and the share price because they are the largest shareholders. No one benefits more than them from the share price increasing in value. So, here's just some more thoughts that I have. Small cap in nature means that this investment does have some risk. If the stock goes down to a 15 enterprise to free cash flow, I would consider taking on a much larger position. That never happened, so I didn't end up buying a massive position. But for now, I am leaving this as a smaller position in my portfolio. I will max it at 3%, which is what I did. And then the stock ran 169% on me, so it became about an 8% position in my portfolio. However, this company has all the makings of a long-term compounder. Very strong and clean balance sheet, substantial cash flows, very high margins, 92% gross margin. Projected to grow revenue at 32% this year, 38% compounded annual revenue growth over the past 4 years. Large and growing market, net dollar retention of 134%. High insider ownership, founder-led, founder owns 28% of the business, little stock-based compensation, and no dilution happening. So those were all of my thoughts when I found the business. Those were all of my notes. And I was just like, you know what? Yeah, I'm sold. I'm buying this stock. It's cheap. I love the balance sheet. I love the free cash flow. I love the margins. I love that it's founder led. And that's basically the conclusions that I came to. So that is the stock. That is why I bought it down here. I was focused on the fundamental growth, not on the share price. And I made a return on investment of about 169% in the matter of a few months. The company got acquired, so I had to sell it. What did I end up doing with my positions then? What did I end up doing with all that cash I made? Well, if we head over to my activity tab here on stock unlock, we can see that I sold Magnet Forensics and I actually ended up buying more Brookfield Asset Management and more Cargojet. I won't go into full detail on why I ended up buying these two stocks because this video is getting quite long. Basically, I just thought that Cargojet was quite cheap at the moment when I bought it. And I also think that Brookfield Asset Management is one of the best dividend growth plays in the entire stock market right now. And as I have been saying on my channel for some time and on these stock unlock live streams, I think that Brookfield Asset Management was one of those very unique investment opportunities in the market. And I didn't think that it was going to last long. So I plowed as much money as I possibly could into Brookfield Asset Management. So that's what I did with my proceeds from Magnet Forensics. We can see that I am up 10, basically 11% on the Brookfield Asset Management addition that I did here. And I am up about 16% on the shares that I purchased in Cargojet. So the sell, basically I made 170% on Magnet Forensics. I took that profit and now I'm making more money on it because I put it in BAM and Cargojet as of now at least. So yeah, that's the stock that I had to sell. That's a portfolio overview. That's what I've been doing in my portfolio. I am going to make a video on Brookfield Asset Management and BN right here because I think that they're probably some of the best stocks in the market right now. And I'm putting my money where my mouth is. Brookfield Asset Management makes up about 17.6% of my portfolio now, and BN makes up about 9%. So between these two stocks, I have over a quarter of my portfolio in them. I'm very bullish on these two companies. And again, I'm putting my money where my mouth is on those ones. But that's going to wrap up the video, everyone. That's the stock that I had to sell. That's where those are the two stocks that I was buying. That's my portfolio performance as of right now. I am still beating the S&P 500 by about double. And I'm very happy with my overall performance and where my money is allocated currently. So if you guys enjoyed the video, please leave a like on it. I really appreciate it. I'm making this video from Da Nang in Vietnam in one of my Airbnbs. Actually, I'm in a hotel right now. And yeah, just wanted to give you guys a quick portfolio update when I had the chance. So again, leave a like on the video if you guys enjoyed. And I'm going to try and get some more videos out ASAP. And I hope you guys are having a great time. And I hope to see you all again very soon. All right, I'm going to hit stop now.